All right, guys, welcome back to this third and final outcome in Unit 3. This outcome is all about what's called operations management, okay? The last outcome on human resource management, which is a really, really important aspect of running any business. And this one is on another very, very important aspect of running a business, and I'll kind of explain a little bit more about that shortly in this video. This first key knowledge dot point is actually very similar to the first one in that last outcome as well. That was about relationship between managing people basically and business objectives. This one is about relationship between managing operations and achieving business objectives. Okay, so that's what we're getting into. So this is first time you would have seen the study design here. So the new area of study here. So that is all the stuff that we're going to cover in the next 9 or 10 key knowledge dot points that you see there. Here's the first one we're looking at, which is what this video is all about. So let's get into it. So the first question, before we even get into the relationship, is really important that we have an understanding of what we mean by operations. Okay. So what we see here is like a chart, a diagram of what a business might look like. Okay, you can do this with any business. You kind of, sort it into the different people or teams in a diagrammatic way, just so you can see how the business is structured or laid out. Okay, so seeing at the top of our business, we have our CEO, and then reporting into the CEO, we have all the managers of the main departments of our business. Okay, so we've got our human resources manager, our finance manager, our operations manager, sales and marketing, tech support. There might be others. This is just like one very, very simplified example. There might be other divisions or departments in a business, but just keeping this real, real simple for the time being. Okay, so CEO and then all of our different managers. And then the managers underneath would have their teams of people working for them. So the last outcome was all focused on what happens in that area of the business, the human resource manager, and what their team does. Okay, so that was the focus for the last outcome, outcome 2 of Unit 3. And the reason that there is an entire outcome devoted to human resource management in this course in Year 12 is because, as we saw, like, it's so important. Like, you're only going to achieve your objectives in the business through your people. If you don't have the best people who are motivated, trained, developed, all the rest of it, as best as possible, you're not going to achieve your objectives. So such a hugely important aspect of running a business is what happens in HR management. That's why it has an entire outcome devoted to it. Now we're shifting to operations. And again, this is really even more important, okay, as we'll see why shortly. So this is an absolutely critical element in our business, operations department, division, function, whatever you call it. The operations manager sitting at the top, reporting into the top level with all the people beneath. So we're moving on to an absolutely critical area of the business. Now, interestingly enough, Year 11, we looked at sales and marketing. That is another important part of the business. We don't look at finance or tech support or any other areas of the business specifically in this course, but the two we do look at specifically in Year 12 is HR, which we've just done, operations, which we're about to do. Okay, and the idea is that everybody who works for a business would fit somewhere in a chart like this that would apply to their business. Okay. So what is operations? Operations refers to the part of the business where work is done to transform inputs into finished outputs. So if you needed a one-liner definition for operations, that could be it. Okay. Expanding on that, preparation, delivery of goods and or services, because this does apply to all types of business, for customers to purchase. Everything you purchase, operations is responsible for producing. Okay. This can be something tangible, such as your phone, the computer that I'm recording this on, this cup that I'm drinking from, this TV behind me, all the stuff physically touch. If you can physically touch something, it's tangible. Or something intangible, such as a massage, a haircut, financial advice, an intangible service. So we have tangible products and intangible services. So the operation of the business, its core function, its purpose, its reason for being. Okay, it's the part of the business that generates the revenue. It's the business's most visible feature. It defines the business's identity. That's why I said before, it's the most critical part of the business. It's kind of what the business is all about. Okay. Just to expand on that and help you get your head around it, that is a picture of Coles headquarters in Hawthorne East in Melbourne. Okay, you can see a big fancy office building. There would be a couple of thousand people working there at least, I would imagine. They would be human resources people, finance people, marketing, sales, technology people, all kinds of people, right? None of those people work in operations for Coles, okay? Yep, they work for Coles. Yep, they work in the business, but they do not work in operations, okay? So those people, again, just mentioned those previously, those people would be based in head office. They work for the business of Coles, but they do not work in operations. If you work in operations for Coles, you work in a store, basically. Or you might work at one of the distribution centres. That would also be deemed as part of operations. That's the inside of one of those places where all the goods come and are then redistributed to the individual stores. That is operations for Coles. Okay. Again, BHP Billiton, that is one of their corporate head offices. Not sure if that's actually Sydney or Melbourne, but that's a BHP corporate head office. Again, that is where all of those sales and marketing, finance, HR people would be based. Again, those people in that swanky office building, yep, they work for BHP Billiton, but they do not work in operations. If you work in operations for BHP, you work at one of the mining sites. Okay, that's the reason for being of the business. They are a mining company. If you work in operations for BHP, you work in the mining part of the business. You don't work as an accountant in the head office. Qantas, again, top left there is a Qantas head office. That's at Sydney Airport. Operations, if you work in operations, there's a bunch of, obviously an airline is quite complex. You might be cabin crew, you could be pilot, you might work as ground crew at the airport, helping people check in. You could work in the catering part of the business. Lots of different parts of operations to do with an airline. But again, it's those visible parts that support the actual operation of the business, not the people sitting behind the scenes, working on the numbers, managing the people, that sort of stuff. Okay. Hopefully getting the idea here. Taking this to the Yakult, where we went out to before we started the outcome. So they said to me on the day that in total at that site, around 65 people work there, 30 of them in operations. So in other words, 30 people work on the factory floor and in the quality control labs that we saw. So when we saw, we looked one side, there was the big vats that were producing the actual Yakult yogurt drink. And then we saw the bottling operation and packaging operation. All of that is operations. And they employed 30-ish people in that area. But there were another 35 odd people working in, I guess, the part of the building you can see there, the head office part, across sales and marketing, IT, HR, finance, so on and so forth. So those are non-operational staff. Okay, so hopefully you're getting what we mean by the operations part of a business. It's going to look very different to each business, but you will recognize the type of business from its operation. If you went into and looked at an accountant working in their desk at any of these businesses, it could be, Qantas, BHP, Yakult, or Coles, and you just looked at that person working their desk, you wouldn't be able to tell what business they were working for necessarily. You wouldn't be able to identify the business. But if you looked at operations, that's when you can identify what type of business we're talking about. Okay, so really important that you understand the concept of operations. Okay, so why is it so critical success? Why do we have an entire outcome based on just this particular part of the business, like we had one on human resources? Because, like I said before, so important to have the right people working for you and doing all the right things by those people so that you can achieve your objectives. Why is operations so important to success? I think it's probably even more obvious. What operations are actually producing the product or the service that your customers are going to buy. Of course, it's critical. Okay. So operations are using resources such as materials, people, machinery, equipment to make goods or produce services or both. This is just some language here, which we're going to kind of build on as we go through the outcome. The resources that we use are called inputs, and the operations team transfers those resources or those inputs into a final product that is sold to customers. The activities involved in that transformation are known as processes, while the final good or service is known as the output. The very next key knowledge dot point, 3.3.2, it's called the operation system. That's what we've just described. Okay. So the focus of the next key knowledge dot point, the role of the operations manager is to oversee that system. Okay, so that goods and services made in an efficient manner when ended up with as high quality product or service as we possibly can. So the operations manager looks after this process where we take inputs, we put them through transformation processes to turn them into outputs, which are ultimately sold to the customer. So it's kind of breaking the operation system down into three very, very simple parts. A great definition of operations management. Operations management consists of all the activities which managers engage in to produce a good or service, overseeing the transformation of inputs into outputs. Now, be careful with definitions here, because defining operations, operations management, and operations manager is three separate definitions. Okay, you can't use the exact same words to define each of those three things. So just think about that. Okay. If you're defining operations, you can't use that same thing to define operations manager, because operations manager is a person that oversees operations. So just be careful when you are making notes, when you're answering questions, that you're wording things in such a way that you actually are defining the thing you're trying to define and not getting these three things confused. Now, this area of a business has considerable influence on the quality, the cost, and the availability of a business's goods and or services. So the quality, if you're the people that are producing the actual good or service that's being sold, obviously you have an impact on the quality because you're producing it. Also the cost though, okay? The idea is we want to be producing what we can for the smallest amount possible. Okay, if we can maintain quality or even increase quality while reducing the cost, that is a bonus, because that's going to lead to high profitability. And obviously the availability, you need to be making enough to satisfy consumer demand. Okay, you don't want to be making too much. You'll kind of pick up on the vibes of why later in the outcome. And you're not going to be making too little, because then you're not meeting demand and you're going to have unsatisfied customers. So quality, cost, availability is really the focus of what is happening in operations. Okay, so the reason operations is such an important part of the business and why it has this whole outcome is because this is where some key elements of what happens in the business are managed. And this relates to what we were just talking about before. Okay, the cost of production. Okay, in operations, you're managing the cost of production. That is something you want to constantly be trying to minimize. Operations, like we said before, are responsible for the quality of the finished good or the finished service, or the service that you're delivering. And that obviously you're trying to maximize. And thirdly, operations, the operations manager is responsible for the level of productivity happening in producing the goods and services. And that is something you want to maximize. You want to produce whatever it is that you're producing in as productively a way as you possibly can. Okay, so what every business, regardless of what type of business it is constantly trying to do is create maximum quality and quantity of output at the lowest possible cost. That is fundamentally what operations are trying to do. Maximum quality, lowest cost. Okay. Now, over the course of this outcome, we're going to look at a whole range of strategies that businesses use, which kind of allow them to do that, and focused on different aspects. Okay, so we're going to look, for example, at how businesses can use technology to do this, how they can manage quality to do this, how they can manage their materials to do this. So actually at the end of the outcome, some of this stuff you will kind of have more of an understanding of, I think, and actually will be able to answer questions on this stuff, even though it's the first key knowledge dot point. You'll actually be able to answer them better at the end of the outcome, because you will have more examples to kind of use when you're answering the questions. That will make more sense to you at the end of the outcome, because obviously at the moment you don't know what you don't know. But trust me, this will make more sense as we move through the outcome. Just going to introduce a couple of key terms, okay? Efficiency and effectiveness, because they crop up a lot in the study design, okay? And you're going to see those two terms a lot as we go through this outcome. So just to put them out there now, so we have an understanding of what they mean. Efficiency is how productively a business uses its resources when producing a good or a service. So how productively we're turning those inputs into the outputs. In other words, what we're trying to do is produce more with less, okay? Ultimately, that's what it boils down to. Inefficient businesses are basically not using the resources as effectively as they could be, okay? An efficient business makes the most of their resources, transforming all of those inputs into the products and service in a way that maximizes profit. So in other words, coming back to cost in the cheapest way possible. An inefficient business is wasting money somewhere in the operation system through not using the resources as effectively, as efficiently as they can, okay? Really simple example just to demonstrate that. If a $2 million turnover business can reduce their staffing levels from 10 staff to 8, but still turn over $2 million, you could say that they've increased their staff productivity. What would be the maths there? By 20%, is that right? Don't know about the number, but basically they've certainly improved their productivity, because they basically are achieving the same end goal with less staff than what they were originally. So now they're being more productive, okay, which means they're being more efficient. Productivity and efficiency, very, very similar, okay? If you're being more productive, you're being more efficient, vice versa, okay? So hopefully you get some idea of what we mean by efficiency. But again, we're going to be talking about that a lot through this whole outcome, so it will become kind of ingrained in your brain. Effectiveness is the other term that is used a lot in the study design, and we need to hang content onto. The extent to which a business achieves its stated objectives. So that's your definition of effectiveness. So in other words, how well are we achieving what we're trying to achieve? Okay, and those objectives, I would stick to the business objectives that we used right at the beginning of the course. So effectiveness basically is doing the right things, and efficiency is doing things the right way. Again, don't be using that in an answer. That's just to help you understand kind of in your own mind the difference between these two things. But that kind of helps me to understand, okay, so that, okay, efficiency doing the right things, effectiveness doing the right things, efficiency in the right way. That can then lead you into how you could actually define the two. So not to use it in an answer just by way of explanation. Now, going back to the key knowledge, we haven't actually started talking about yet what the actual key knowledge dot point is about, this relationship between ops management and biz objectives. Okay, because I had to talk about what operations is and put some key points out there so that everything would make sense. So now we'll get on to, now we know what operations is and we understand some key terminology we're going to be coming up against. Now let's talk about this actual key knowledge dot point, the relationship between operations management and business objectives. So first off, which objectives? I said just a minute ago, let's stick with the ones that were identified earlier on in the study design. Business objectives, including to make a profit, increase market share, so on and so forth. There's those 5 or 6. So it's always easier just to stick with what's in the study design. We know there's more, but let's stick with what we need to cover. So let's take each of those objectives in turn now and talk about how operations can help a business achieve that objective. Now, there are multiple ways in which this can happen. And again, I think once we've gone through the whole outcome, and some of the other key knowledge dot points, particularly around strategies, you will be able to come up with many more yourself. This is just to put out there now some examples of how this can work, but this is not content that, if you are doing this the right way and if you are understanding this stuff in enough depth and understanding the logic behind it, this is not something you need to learn like rote. Okay, if you understand the content, if you're ever asked this question, how does operations help a business increase its profit? You should understand the content enough to actually come up with a logical answer about how that can happen. There's not one way. There's hundreds of ways. I'm going to give you a couple just to kind of demonstrate the point, but this is not stuff you should be learning. Okay, there's so much content in this course that you need to learn. This is not stuff you need to learn. This is stuff that you should be able to just produce when needed through your understanding of the content, is what I'd say. But anyway, just to give you some examples of how this kind of can play out. So, how does operations help a business increase profit? Now, we said that operations are responsible for the production of the product or the service we are selling. So, assuming we know that, if operations can produce a high quality product without increasing the cost, they might be able to sell more. Okay, you could increase sales, therefore profit increases, because we just said without increasing cost. The idea being there's no point increasing quality if it's going to cost you millions more to do, because then the extra sales might not actually offset the cost. But there's logical steps there. If we can produce a high quality product without increasing the cost, we might be able to sell it to our customers without increasing the price. But now they're getting a high quality product for the same price. That should lead to increase in sales. Increase in sales helps us make more profit. Second way, and again, this is just a random way, there's many others. If operations can produce the same or higher quality output for a lower cost, now the business can either sell for the same price and take a higher margin per item, that increases profit, or if you're able to lower the cost, you could now reduce the price, and that then should lead to more sales. And again, that leads to an increase in profit. So like we did with human resource management, you just need to, however you're going to explain this, you just need to make a logical argument, logical steps. Okay, operations do this, which leads to this, which gives you the option of doing this, which would lead to this, which leads to an increase in profit. Okay, just need to have a logical, concise argument of how you get from one to the other. Market share was the next objective. How can operations help us increase our market share? Operation responsible for the quality of the product. Also, always just assume service. I'm going to say both every time. If you can increase quality relative to your competitors, you therefore should sell more than them, therefore increasing your market share. Okay? Makes sense. Simple, logical steps. This happens, that leads to this. Another way, operations responsible for how efficiently the product or service is produced. We said that before. In other words, how cheaply. If you can produce it for less, you can reduce the selling price, therefore attracting more customers relative to your competitors, therefore increasing market share. So a lot of these arguments are very similar to the other ones, but you have to tweak them because you're talking about a different objective. How does operations help the business fulfill either a market or a social need? Again, you recognize that objective from earlier in the course. By producing the highest quality products at the lowest possible cost, there is a greater chance that it's going to sell, therefore being able to fulfill that market or social need. As simple as, okay? How about shareholder expectations? Now let's make an assumption that shareholder expectations are to maximize profit, because that's generally what shareholders are looking for from the business that they've invested in. So therefore, we then go back to the same argument we used for that. Okay, increasing quality or lowering costs leads to increased profitability. Okay, we just go back to the profit one because that is a basic fundamental shareholder expectation. Now, a few other ways in which operations can help business objectives. And these ones will definitely make more sense. We've covered some other areas within this outcome. So I'd include them in your notes now, but you will have more of an understanding and more description around this once we've gone through some of the other content in a few weeks' time. So one way operations can help increase profitability is by introducing some technology in the operation. That could reduce the amount of labour required, hence leading to a reduction in the wages bill, therefore increasing profit. So we look at technology specifically shortly. Another way in which operations can help increase market share is introduce some form of quality control. That ensures faulty products are not being sold. That improves overall product quality going to market, which increases customer satisfaction, which increases sales relative to competitors, which increases your market share. And again, we look at quality control. In fact, we saw it in action at Yakult even. And I'll refer back to that when we look at that. So you can see, again, logical steps. One thing leads to another, leads to the next, which gets to us achieving our objective. Fulfilling a market need, technology might be used to design new and innovative products which can fulfill unmet needs in the market. And so on and so forth. So many different ways to do this. But by the time you do the SAC or the exam, you should be able to answer this question very, very easily in so many different ways. Okay. Fulfilling a social need, maximize the amount of waste we're recycling, minimizes the negative impact on a business has on the environment, which might be a social objective that you have. Okay. That is it for this particular outcome. So really what you should get off that, what we mean by operations, okay, fundamentally. Efficiency and effectiveness, just a couple of key terms we're going to see again and again and again, so you'll get used to those. And then this, how we can answer these questions about how operations management can impact on achieving those business objectives just by making logical, simple arguments about if something happens, that leads to something else, which leads to something else, which leads to the achievement of that objective. That's how you always got to answer those questions. That's it for this video. I will see you in the next video where we're going to talk about the operation system. Cheers for now.